Pretty much what we expected to happen happened. Iran has again claimed that the Strait of Hormuz is closed as there has been tensions with Israel and Lebanon through Hezbollah. We still have JD Vance, who's in Switzerland for US-Iran peace talks. That's going to guide the narrative for the start of next week. We had Kevin Warsh speak for the first time as the FOMC Fed chair, and there's a lot of talking points that we're going to cover today relevant to this hawkish tone. The Fed interest rates definitely had a change in perspective as well, and now we might be looking at about 2 rate hikes for the year, while S&P 500, SpaceX, and crypto performance all have been impacted for the near future. All of this and more we will cover in today's video. Hello, everyone, and welcome to Strategic Markets, your place for technical and fundamental analysis all at once. And into our end of week session. I don't think it comes to anyone with surprise, but the Strait of Hormuz is closed again. There were only few ships leaving in first place anyway. Look, it is said that about 25 ships had traveled through the critical channel throughout Thursday. Tensions rose again on Friday, stating that bombing has come from Israel's side on Lebanon, and that's not part of the ceasefire that Israel and Lebanon had agreed to. Therefore, Iran has closed the Strait of Hormuz again. Now, on this particular matter, we do have JD Vance still going through and arriving in Switzerland for US-Iran peace talks. Now, if they can fix this up by the start of next week's trading session, hopefully the impact on oil prices should be none. But if it does not fix by then yes, we can see over here that we're doing very well, but this downwards arrow could very much so turn upwards again, considering oil is around that 200 SMA. So we're going to have to watch and see how things pan out this week and how the negotiations go. But if America can get Israel in check and at the same time continue to give some confidence to Iran that we're not going to proceed ahead with further actions against Lebanon, then hopefully the price of oil doesn't keep going up, causing more inflationary pressures. On other news, Kevin Warsh ended his first ever FOMC meeting as Fed chair. I was expecting a bit more of a dovish Kevin Warsh, but it actually turns out that he did speak a little bit hawkishly, and I kind of can't blame him as well due to the current situation of what the American finance is really giving to its people. But look, he said that inflation is still way above the Fed's 2% target and prices are too high for most people. He wants to fix 5 years of misses on inflation. He's directly saying pretty much that the previous Fed failed. The Fed will no longer tell you in advance what it plans to do with interest rates. This is the little aspect in the market that had people a little bit concerned, because there's going to be a lot of uncertainty in the market now, which means that people are not going to be able to predict what's going to happen, and because of that they might act out of fear. He does watch the stock market prices more than anything when he's making a decision, and also at the same time, even though interest rates are currently hurting the housing market, they're not slowing the financial markets down, and the S&P 500 has been a great example of that. That could signal the fact that because S&P 500 has been hitting all-time highs for so long, that he actually might be comfortable with possibly hiking rates this year as well, which is what the market is currently predicting. So if you see over here, we're right now in this particular region, but it's saying that, possibly within this year, we could have 2 rate hikes by the 9th of December 2026, because the stock markets are in such a good place that, they could be having a bit of a correction, and these 2 rate hikes would be fine for the markets. Definitely concerning, but on that, we're just going to have to see how that pans out for the next couple of months. The S&P 500 performance over here on the linear graph, it is hitting resistance, and honestly, it does look like it's lost a little bit of momentum. I mean, it's had 3 weeks considered in red, even though relevantly you could say the price action is up. It's always started higher and gone lower. So we could be losing a bit more momentum. Kevin Warsh's hawkish views continue to affect and prime the market, then in that case, we could possibly have room for downwards unless we break above over here and retest this particular trend line and define a direction. Right now, I wouldn't be surprised if we do lose a little bit of momentum and come down to touch this 20-week SMA as well. What about that with SpaceX? Other hands, when we look at, actually, I might just talk about it. SpaceX, on the other hand, had its strong performance for last week, but it's kind of particularly finding support at the 184, 185 level. So we're just going to see how that particularly performs for the next upcoming weeks. But yes, like we mentioned on this channel before, we are not participating in the SpaceX trade at all, only because, most IPOs for tech stock within 1 year have underperformance from IPO. So we'll see how that particularly goes. Bitcoin doing some not so fantastic stuff. Pretty much on the lows over here again, just ranging sideways between the 63 and the 60 and about the 64K region to the 62.5 region. It looks like it's taking the 20-day SMA, which could be positive news, but right now on the weekly, it's not looking so great. So there's no major news events or narrative except that the fact that bipartisan crypto negotiators have launched an 11th hour push to pass the Clarity Act. Lawmakers are doing a sprint of meetings next week to finalize the key details of the Clarity Act and to push it before the August recess. So if they're successful in doing that, then yeah, maybe crypto has an adoption sequence and maybe it actually goes ahead, which could be really good for the crypto markets. And if S&P 500 is losing a bit of steam right now, it could be really good for maybe crypto to catch some of that rotation. But if this doesn't happen, then yeah, it's going to be very interesting to see how narratives for crypto plays and possibly how we're not going down to some zones of 57K to even 41K based on this particular Fibonacci. And a lot of other Twitter spokespeople or YouTubers are calling for a 40K Bitcoin. I still am not on that particular bandwagon. I like to hope that we hold support. And based on this multi-month trend line, even though we are right now trending downwards, on the month, we haven't closed below this multi-month trend line. So as long as we haven't closed on the particular month, I'm still holding out hope that we could move. Now, if this particular month closes and then we have July, like 1 month close below, and then if the next month also doesn't recover, then yeah, we're pretty much in very tough grounds. And yeah, then in that case, calling for Bitcoin to 40K is a reasonable step. But until then, I'm just kind of interested to see how things go as compared to calling for a 40K Bitcoin. Bitcoin liquidation heat maps, though, we can see that we do have some liquidity sitting down here at the 60.2K level or the 60.3K level. So could Bitcoin go down to that? Very likely possible. Like I said, there's really no set narrative in the recent couple of weeks. So Bitcoin could just do whatever it likes to do. And we just have to see it play through as to what it has to offer. Similar right now towards Bitcoin liquidation, move to the upside still seems reasonable. But again, that has happened in the past as well. So for that to play out, we really do need a bit of a narrative shift. Similar thing with Ethereum as well. We're on this weekly chart and we are in this particular wedge pattern, but right now it's just consistently closing weekly candles below this particular wedge. So you can see that this particular week it came to test that particular wedge support line, which is currently as resistance, but it was not able to break above it, printing a fairly, I would say, weak bull candle over here. So we'll see how the end of this particular month pans out for Ethereum and make decisions based on that. And altcoins, on the other hand, against Bitcoin, are currently ranging sideways. So that is an interesting thing to see that, people haven't lost a lot of faith in altcoins just yet against Bitcoin, that it's still holding some relevant strength, and it has been ever since the start of May. So that gives me a little bit of hope that maybe smart capital is positioning in altcoins because they know about a move that I particularly don't. But it's really not that much of a increase. It's only currently about a 20% increase, and altcoins being a very small asset class, for it to perform, it can do that over many high multiples. So let's see how we go. But yeah, right now, from a narrative perspective for this particular week, we've just come out from a little bit of a grayish slash, I would say, darker narrative than what I expected to be relevant to war and Kevin Warsh's comments. But I'm just intrigued to see what happens by the weekend, whether the Strait of Hormuz opens up, and how the rest of the market chooses to perform from there onwards.
Sorry, that chart's very, very interesting as well too. Keep an eye on the RSI, whether or not that goes below 50
Okay.
would be fascinating. and also to see whether or not you get a lower low and lower high on your MACD, because that would actually be quite defining. Those two signals there, as well as lower highs and lower lows on your that's your total altcoins. Is that right in terms of that particular chart?
Yes.
That could be quite defining in terms of actually defining a new neutral to negative trend in relation to that.
No problema. Thanks for that, Steve.
Yeah.
And that is probably a really good segue to pass it on to Steve for his technical analysis, please.
All right. Okay, so let's have a look firstly at Bitcoin to begin with, whilst we're still talking about that particular topic. And what I really want to raise as well, because I was checking this out whilst you were having the discussion there and thinking about that Fibonacci level that you're actually discussing there as well. Interestingly enough, I do have a level listed on this chart around about that 54,000 level. So that corresponds with that Fibonacci level that you actually had put up on that chart previously. Now, I'd have to look back as to what that actually corresponds to from a previous time in terms of where that prior support resistance line actually aligns with in terms of 53,800, which is highlighted down there. But it is actually listed on my chart for some strange reason. So there is actually a prior support resistance level at that level there as well that this could actually come back down to should these support levels here from April 2021 and March 2021 fail in the future as well. Because then you've got this other one here at 57,500, let's call it, before it gets down to 53,800 should it trend downwards towards that area. Now, it would need to actually get down to that area firstly, obviously, but at this point in time, we're literally taking a look at the situation where we actually have a bit of a struggle against short-term moving averages at this point, where we're just basically tacking along with this short-term 8-day EMA at this point in time, being that yellow line. So let's see how things do pan out. Should Bitcoin actually start recovering, it would need to really start getting above all of these short-term moving averages as well as these resistance lines. We were talking about this in our last video as well. So it's got a lot of work to do before it actually starts improving overall. On top of that, the internals would need to improve quite dramatically. Now, you're seeing the RSI overall starting to improve. You can see that down below. But this DMI indicator would need to flip in terms of a bullish aspect as well. At the present time, it's been bearish for quite some time, with the red indicator being above the blue indicator, and that's been the situation since about mid-May. And you can see what the chart's done since that time as well too. Since mid-May, it's literally fallen from, what's that level there, 77,800 all the way to where it is now, 64,000, falling as low as 59,000 basically at the beginning of June. So you can really see the power of some of these internal indicators in relation to giving you some idea of direction. In terms of Ethereum, similar kind of situation in terms of this DMI indicator as well. About mid-May as well, it fallen from 2,300 down to as low as 1,500 and currently trading now at 1,730. Similar situation in terms of the actual short-term moving averages as well. We're tracking exactly that same situation. I'll enlarge that so you can see it. And we're tracking right down at that 8-day EMA once again as well. And basically really, really below this resistance area here from April 2025, which we've been talking about in previous videos as well. The biggest thing about both Bitcoin and Ethereum are these new potential magic numbers that we've been talking about as well, in terms of 1472 for Ethereum. And in terms of Bitcoin, the potential magic number was 57,489 in that support level there. So whether or not these are actually hammering out a base remains to be seen. It's more along the lines of whether or not we actually start forming all of these higher highs and higher lows, which are actually going to overcome these resistance areas that we see on the charts. So at this point, we're still in a bit of no man's land, trying to find a catalyst to basically build it up. And as Yash has been telling the narrative, fingers crossed for those who are actually holding cryptocurrency, things like the Clarity Act may actually be that catalyst to actually see if we can actually push through those resistance areas and work our way from there. The other major story that Yash was talking about was obviously Brent Crude. Have a take a look at that. And I do apologize for not actually covering this in the previous video. And I only realized that after we stopped videoing. But in terms of that, we can really see that especially in terms of Thursday's trade in particular, we really actually have bounced directly off the 200-day moving average on this particular chart. Very fascinating overall in terms of where we actually go from here. Now, based on the geopolitical aspects that have just been occurring over the weekend, especially with the Strait of Hormuz now closed once again, what do we expect will happen? Well, most likely we'll probably see an increase and a bounce directly off this 200-day moving average and probably come back to test these volume profile areas from 2023, which we had discussed a long, long time ago, right back over here around about the beginning mid-March. So they were the kind of areas that we were tackling over here before it started shooting right up and forming all of these 4-hour support and resistance lines back in March as well. So this could be really, really fascinating. What I'm basically thinking that could potentially happen is we're going to test these volumes profile areas. If all of a sudden we do actually surpass these areas, which may potentially happen because everyone starts worrying in relation to the price of oil once again, seeing that there could be some supply issues going on over in the Strait, we could then test this potential or prior support area, which is now potentially turned into resistance at $90.10 that we've been talking about previously, see whether or not that holds, and if it does, then we could be range bound between these areas here for quite some time. You got to remember, when it comes to support and resistance, once a support level once a resistance area gets tested, that then becomes a support level. It's almost like going up and down an elevator, and then that becomes a support level, and you go and test the previous resistance area. Once that resistance area gets tested, that becomes the new support area, and so forth. And then the previous support area then gets tested and so forth, and then it all comes down and so forth from there. That's usually the way these kind of things work out on a chart. So let's just see how things do keep on going. This here down here in terms of that 200-day moving average in relation to Brent crude will become our support area at this point in time, and we'll see whether or not that holds. The story will keep on going in terms of the narrative. In terms of USO, this is where things are really fascinating because this yearly VWAP being this green line has held all of the way throughout all of this, ever since we've all been coming from around about the end of February. We've been testing this green line all the way through, and as you can see, it has not broken once ever since all of this time. It's held all the way through this. So anyone who's held USO all the way from back here has been in a winning position. The bulls have been in control, and no one who has held USO from all the way back here has been in a losing position whatsoever. So all the way through this, they've all been winning, and they still have been winning all the way even up until here on average. So overall, why would they have been selling? They wouldn't need to. So in terms of things here, they're still basically saying, okay, we don't need to sell. So overall, people have still been continually buying all the way through without any major issue. And that could be the same situation even as this situation is unfolding in terms of the Strait of Hormuz as well. So if this particular situation continues to bounce upwards from here, the bulls are still firmly in control in relation to USO as well. Makes things really, really fascinating. How's this all relating in terms of the indices? Well, in terms of the SPY, things are looking neutral, really more than anything else. It's basically come right back down to the short-term moving averages. Everyone might be looking at that and saying, hey, this is actually a really, really good positive chart. Well, the truth behind it is we really don't know exactly where it's going to go until we get some firm direction next week, because it could actually fall beneath these short-term moving averages and then come back to test this 50-day moving average, because we haven't formed higher highs or all-time higher for quite a while. We came back and bounced towards this 50-day moving average, and now we need to see where it's going in terms of direction. The same thing with the Qs. It's pretty much the exact same chart, although there's a little bit of extra strength there compared to the SPY. And the SPY being the top 500 stocks, the Qs being the tech-laden stocks. But how about Dow and the Russell? Well, in terms of the Dow, top 30 stocks in the US, that's actually had a bit of a pullback after reaching all-time highs over the past week. It's actually a little bit higher off the short-term moving averages, but now it's starting to have that retracement, so to speak, off those all-time highs, looking for direction as well, probably pulled back by all of the other activity of the bigger indices. The Russell, on the other hand, a little bit stronger than the Dow. So there's a little bit of divergence, so to speak, between all of the indices. But the one spanner in the works is actually now the Dow Jones Transportation Average. Now, in terms of this Dow Jones Transportation Average, we've been talking about this in terms of Dow theory. Overall, you want all of these to be rising in tandem to show strength in the market. Now, the Dow Jones Transportation Average had been rising quite reasonably for a reasonable amount of time. But why over the last week has it been falling? Very, very interesting overall. It's actually now traveling below the short-term moving averages and could be throwing us a little bit of a cautionary note in relation to the way the whole markets are traveling at this point in time. So be on the lookout for that. And with Kevin Warsh having spoken recently as well, the bonds have been doing some very, very interesting activity. With all that hawkish tone in terms of his speech earlier in the week or about midweek, you probably would have expected the bonds to have actually come down a little and the yields to have gone up. That wasn't the case. Well, for some strange reason, the bonds actually kept on going up and the yields actually came down, which was very, very counterintuitive. It was only towards the end of the week, after the bonds had actually jumped right out into outer space, right at the end of the week, that it started coming down intraday. And you can see that what's actually happened is it's come right to the top here, where this green line is in terms of the yearly VWAP. Once it hit the yearly VWAP, that's when bonds started retracing. Go figure. Now, if we take a look at the actual 10-year notes in terms of the yields themselves, you can see that things have actually been retracing downwards, but only until it hit the 50-day moving average, being that blue line. So there could be some very interesting tone coming through in the coming week. Let things settle down when it comes to the bonds and the bond yields, and then we'll get a clearer picture as to what's going on in the upcoming week. The really interesting story is the dollar. Have a look at this. This has just been going absolutely gangbusters, like I like to say. It's really been going nuts. This has actually just taken off ever since probably around about mid-May, and it hasn't looked back. It's just been making higher highs and higher lows. And this is what's really causing me a lot of concern when it comes to the markets overall. Why is this rising so much? This tends to suggest to me that people are losing faith in the US economy. When this keeps on rising, this can actually be leading more to a lot more risk-averse aspects going on in relation to the US economy. It's really moving far away from this support area that formed back in December of 2025. Why is it moving this far away, though? People are tending to lose faith in what's going on in relation to the economy and the US dollar overall. And that is really, really interesting. So really keep an eye on that. Another area to really keeping an eye on as well is gold and silver. Now, we were talking about this even over the last couple of videos as well, as being potentially bouncing off something. Go take a look at our long-term view and short-term view video that's been made recently. I'll put a note up in the cards up above as well, because if you take a look at the long-term view and you span outwards, you'll actually see that there's a potential double and triple bottom in relation to gold and silver. Now, whether or not we're going to come back down towards those double and triple bottoms is of interest. We could potentially do that. And whether or not they hold is the other aspect. This could become very, very fascinating over the next week or so, because what's actually happening now is we thought we may have actually been bouncing off those double and triple bottoms and potentially making our way back up above the short-term moving averages. Now, gold in particular seems to be having a bit of relative weakness compared to silver at this point in time. But are we now switching back around in the short term? Because if we take a look at silver, and I'm going to come back to gold in a moment, but if we take a look at silver, we were actually up above 200-day moving average, being this red line here. That was early in the week. Now we've actually slipped back beneath that 200-day moving average. Now that is a concern. So we were actually getting a bit of strength in silver compared to gold, because when it came to gold, we were nowhere near this 200-day moving average, and we were always beneath these resistance line areas from back in October. So that was where we were saying that silver actually had a little bit more in terms of relative strength compared to gold. Now, the situation is that silver has lost that relative strength, and both silver and gold now are actually coming back towards these potential areas of double and triple bottoms that we actually have been forming over the long term. So, like I said before, take a look at that long-term chart and in terms of that presentation that we've made recently, and see for yourself in terms of what you think about gold and silver. Some very, very fascinating aspects there as well. So quite a lot of material covered there, and these are getting to be long videos, and I do apologize about all of that, but there is a lot going on in relation to all of the markets overall, so a lot to actually bring to you in terms of these last few videos that we've actually had. But as you can see, a lot of the geopolitics going on. It is coming down to the suggestion to really keep the stops tight at the moment because of all of these movements that are going on in the markets at the minute. So really keep an eye on those positions. Keep a good eye on the stops overall there. If you're feeling as though that things are just getting a little bit too much right now, then by all means reassess the positions and look, don't be afraid to take a step aside from the markets at the moment if you're feeling as though you need to. Nothing wrong with that whatsoever. With that, mate, I'm going to hand it right back over to you and go for the concluding remarks.
Thanks for that, Steve. I'm in complete agreement with him as well. I'm currently out of the markets only because the geopolitical uncertainty is hitting levels I actually haven't experienced in a very long time. So, with that being said, play in accordance to your particular plan. But on that, just want to say thank you so much for joining us for this particular video. For today's word, let's go with Hormuz closed. That seems to be the fairly relevant marker for this particular video. And you know what? It doesn't come as a surprise at all. But with that being said, if you've liked what we've shared with you today, please drop us a like. That goes a long way. If there's anything we can do differently or anything you would like us to cover, I'll also put that in the comments, no problem at all. And if you enjoyed the journey all along with us, please give us a subscribe to get more of our videos. But on that, thanks for joining us on this one, and we will see you on the next one.
Thanks again, Mark. You're an absolute legend as always as well too, and thank you for everyone as well too. Look forward to having you on board. See you on Wednesday.